Hello fans and friends, welcome back to your favorite channel, The Crypto Guys. Today's video is going to be very exciting and informative because we're going to answer a very important question: what exactly is crypto and how does it work? Of course, this video is for the beginners and newcomers who are interested in the crypto world and want to invest in cryptocurrency. So don't miss any section of this video if you want to know everything there is to know about crypto. Also, most importantly, this is not an advisory video about crypto sale or purchase. It's just an informative video about what crypto is and how it works. Make sure that you do your own research before investing in any crypto coin. Now, without wasting any time, let's get straight to the point. Let's talk about cryptocurrency. Cryptocurrencies are digital means of exchange that uses cryptography for security. Crypto is a digital currency that is created and used by private individuals or groups. Cryptocurrency is a form of payment that can circulate without the need for a central monetary authority like a government or a bank. Cryptocurrencies are created using cryptographic techniques that enable people to buy, sell, or trade them securely. Cryptocurrencies can be exchanged for goods and services, though they often are used as investment vehicles. Cryptocurrency is also a key part of the operation of some decentralized financial networks, where digital tokens are an important tool for carrying out transactions. The most popular cryptocurrency, Bitcoin, has had a historically volatile price. In 2021, it hit an all-time high above $65,000 before falling back. There are many types of cryptocurrencies. According to coinmarketcap.com, there are about 16,000 different cryptocurrencies. The total value of all cryptocurrencies on December 2021 was about $2.9 trillion. Cryptocurrencies don't rely on governments or banks. Instead, they are decentralized. In simple words, they are created, exchanged, and regulated by its users. Cryptocurrencies are digitally mined. Mining precious metals has been used as a means for giving value to money. Blockchain of cryptocurrencies. In banking, this is done with ledgers, which track the flow of money through accounts. While in cryptocurrency, the task is undertaken with a blockchain using a form of math called as cryptology. Blockchain is a secure record of every single transaction made using cryptocurrency. Verified transactions are added to the blockchain as part of the mining process. Mining is therefore not just about creating new money, but also validating transactions. As its name indicates, blockchain is essentially a set of connected blocks or an online ledger. Each block contains a set of transactions that have been independently verified by each member of the network. Every new block generated must be verified by each node before being confirmed, making it almost impossible to forge transaction histories. Experts say that blockchain technology can be used in multiple industries such as supply chain and processes like online voting and crowdfunding. Financial institutions such as JP Chase and Company are testing the use of blockchain technology to lower transaction costs by streamlining payment processing. Up until now, guys, you've learned what crypto is, so let's talk about how it works. Working pattern of cryptocurrency. In layman words, if bonds are the traditional gentleman in a top hat and stocks are the pushy loudmouth with a phone to his ear, cryptocurrencies are the kid in the hoodie who sits at the back of the class coding and doodling heavy metal album covers. Crypto has been around for over 10 years, but it only broke through to mainstream consciousness in 2017 as prices surged. Cryptocurrencies facilitate payments or other exchanges of information between people without the oversight of a central body like a government or a bank. Many people had tried to create digital cash before, but all had failed until Bitcoin was launched in 2008. Bitcoin runs across a distributed network of computers, as opposed to a centralized set of servers like those used by traditional banks. All transactions are recorded on an immutable ledger, which is basically a long list that can't ever be changed. It goes by the technical name blockchain. While Bitcoin has taken on digital money, many other crypto projects are applying blockchain technology to different areas. Everything from social media to file storage has blockchain-based projects seeking to disrupt established industries. You'll also hear the word token in the blockchain world. These aren't the tokens that you might use at an arcade. Rather, these tokens are digital assets that exist on the blockchain and can operate as anything from a currency to a digital good or service. Legal framework of cryptocurrencies. Currencies derive their authority as a medium of transaction from the government or monetary authorities. For example, each dollar bill is backstopped by the Federal Reserve. However, cryptocurrencies are not backed by any public or private entities. Therefore, it has been difficult to make a case for their legal status in different financial jurisdictions of the world. Cryptocurrencies have largely functioned outside most existing financial infrastructure. The legal status of cryptocurrencies has implications for their use in daily transactions and trading. The Financial Action Task Force (FATF) recommended that wire transfers of cryptocurrencies should be subject to the requirements of Travel Rule, which requires AML compliance. El Salvador is the only country in the world which has allowed Bitcoin as a legal tender for monetary transactions. In the rest of the world, cryptocurrency regulation varies by jurisdiction. Japan's Payment Services Act defines Bitcoin as legal property. Cryptocurrency exchanges operating in the country are subject to collect information about the customer and details relating to the wire transfer. China has banned cryptocurrency exchanges and mining within its borders. India was reported to be formulating a framework for cryptocurrencies in December. Only cryptocurrencies are legal in the European Union. Derivatives and other products that use cryptocurrencies will need to qualify as financial instruments. In June 2021, the European Union Commission released the Markets in Crypto Assets (MiCA) regulation that sets safeguards for regulation and establishes rules for companies or vendors providing financial services using cryptocurrencies. Within the United States, the biggest and most sophisticated financial market in the world, crypto derivatives like Bitcoin futures are available at the Chicago Mercantile Exchange. The Securities and Exchange Commission (SEC) has said that Bitcoin and Ethereum are not securities. Although cryptocurrencies are considered a form of money, the Internal Revenue Service treats them as a financial asset or a property. And as with most other investments, if you reap capital gains in selling or trading cryptocurrencies, the government wants a piece of the profits. On May 20th, 2021, the US Department of Treasury announced a proposal that would require taxpayers to report any cryptocurrency transaction of and above $10,000 to the IRS. How exactly proceeds would be taxed as capital gains or ordinary income depends on how long the taxpayer has held the cryptocurrency. Last but not the least, in order to protect yourself from losses in crypto, you have to take some precautions. Before buying a cryptocurrency, you must read the fine print of the company's prospectus for this information. Who owns the company? An identifiable and well-known owner is a positive sign. Are there other major investors who are investing in it? It's a good sign if other well-known investors want a piece of the currency. Will you own a stake in the company or just currency or tokens? The distinction is important. Owning a stake means you get to participate in the earnings. You're an owner, while buying tokens simply means that you're entitled to use them, like chips in a casino. Is the currency already developed, or is the company looking to raise money to develop it? The further along the product, the less risky it is. It can take a lot of work to comb through the details, the better your chances if it's legitimate, but even legitimacy doesn't mean the currency will succeed. Also, beyond those concerns, just having cryptocurrency exposes you to the risk of theft as hackers try to penetrate the computer networks that maintain your assets. One high-profile exchange declared bankruptcy in 2014 after hackers stole hundreds of millions of dollars in bitcoins. Those aren't typical risks for investing in stocks and funds on major US exchanges. Finally, and most importantly, this is not an advisory video about crypto sale or purchase. It's just an informative video about what crypto is and how it works. Before going into the crypto world or making any transaction, please do your own research and don't follow anything blindly. That was all for today's video. I hope you enjoyed it. Feel free to share your thoughts in the comment section down below. Moreover, if you're new and if you haven't subscribed to our channel yet, please do so and hit the bell icon so that you won't miss any new useful information through our daily videos. Thank you for watching and best of luck!